In this session, we're going to look what's the best way for you to get the most out of this training. Before we get started learning strategies and entering trades, let's look at how we're going to learn. I have a 3-step process to really successful learning, and it starts with basically controlling the process. The first thing you need is a good learning environment. I'm talking about when you're working on your charts and you're having a good setup going, but I'm also talking about the environment, the room you are in. You need to eliminate distractions. I've got a television set in my studio. I don't have it on when I'm trading. I don't even have it on mute because it's distracting. Get rid of the distractions in the room. And then be ready to learn. You are in control. You decide when you're going to learn. You decide when you're ready to trade. It's really your attitude. Don't go into this angry or with a bad attitude. The third point is alertness. If you're tired, stop. The next important thing is to follow the structure of this course. These lessons are built like building blocks, one on top of the other. So if you don't get it, hit replay. Start it all over again till you get it, because the chances are if you're not getting this concept now and you move on to the next lesson, which is building on the previous one, you might not get that one either. So hit replay if you need to. The goal of this course is to learn how to trade Forex successfully and to find a strategy that works for you. So let's move on. You know that you're going to spend a whole lot of time right here in this area, MetaTrader 4 interface. So make sure before you're going to put on any real trades that you have a thorough understanding and a grip on the MetaTrader 4 trading platform. As I've said earlier, hit the replay button and familiarize yourself with every one of the important elements of the platform. The objective of this session is to provide you with 3 strategies. The chart setups are straightforward and the entry and exit plans are clear. Now that we've covered trends and support and resistance and important candle formations in the previous sessions, let's start designing our trading strategies by putting all these things together and see how they work in an actual trade. If you take a look at this daily chart of the Australian US dollar, I think it's fairly obvious that we're in a downtrend. This is a very simple downtrend. Here you can see the lower lows and the lower highs. By drawing a trend line across all these lower highs like this, it's easy to see that this currency pair is trending down. Remember, if you have to look at a chart too long to determine if it's in a trend, well then it's probably not a good trend. Look at this chart for example. There's no clear trend here. Stay away from this and find a market that is trending. Let's move over to the hourly chart of the Aussie US dollar and see if we can find a move up to a previous point of resistance to find a suitable entry point. Now let's see what we have here on the 1 hour chart. We have a strong resistance level here. This is a very obvious level. It touched here, bounced back up, try it again, bounce back, and here it's testing that same level again. This is a good example where previous support became future resistance. So if price come and visit this level again, we will look for a sell opportunity. And here price move up and it's right here at this resistance level, exactly what we want. Now this gives us 2 points of confluence. You have the downtrend on the daily chart, which is confluence point number 1, and you have the strong resistance level here, which is confluence number 2. Now let's see if we can find a third confluence point, which in our case will be a candle formation, either a bearish hammer candle or a bearish engulfing pattern. I want you to position yourself when the market falls below this resistance level and gives a reversal candle. Then we're going to sell this currency pair. And the reason why this is a safe entry is because we will now be trading with the long-term trend. And there you are, a perfect bearish hammer candle. The way I look at trades is I work out these points first. I look for a clear trend on the longer term time frames and I look for a strong level on the hourly chart. And then I look for that hot point in the market where things comes together like this. And this is what's called confluence. The stop loss for this trade will go at the highest point of this bearish hammer candle, preferably above the resistance level, and your take profit target can be at the next support level, or you can enter a fixed profit target of, let's say, 20 pips. A safer approach is to wait for a confirmation candle. The confirmation candle is this candle here, immediately following our hammer candle. For a sell trade, of course, the confirmation candle must be red. So your trading checklist for this price action strategy will look like this. For a sell trade, go to the daily chart to determine trend direction. Then move over to your hourly chart to find resistance. Then you have your reversal candle formation. A safer approach is to wait for a confirmation candle. The stop loss will go at the higher end of the candle, and your take profit target will be at the next level. Let's save this chart as a template. Go up to Template, left-click Templates, and name your template Price Action Strategy 1 hour. And this checklist is for a buy trade. Trade in the direction of the longer term trend. Then on the 1 hour chart, wait for market to pull back to a support level, and then gives us a reversal signal in the form of a bullish hammer candle or a bullish engulfing candle. The stop loss will go at the low end of the candle formation, and your take profit target will be at the next resistance level.